All right, crude oil trader here, giving you the good, the bad, and the ugly. Today it's been the ugly for me. Looked at crude this morning. Not a whole lot going on. Looking at the 30-minute, we had the sell off into the 93s, rally up to the 93.60s. I saw my first signal, well, second signal of the week that looked decent in or around 10:30 time frame. So I took it, and you never know where these things are going to go. So I took the trade, and it happened to be the almost the exact bottom of the market. Rallied up, took me out for a stop, and there's absolutely no follow through whatsoever. I mean, it didn't even get down there and retest the. I went short at like a 92.66. Never even got down there again. Just went straight up. So it's just another testament to this market that not only are we in a light volume, I wouldn't even call it volume. We're just in this tight range, um, and every sell-off is bought at this point. So what I was looking for, just so you have an idea, is something similar to what this gold chart did. You had a sell-off, and then it built consolidation in here, and then it had a continuation sell-off. Now this move was had a lot more momentum behind it than our gold trade, or the oil trade rather. But you don't know. I mean, this could have been the beginning of a continuation. So let's look at the 30-minute. This could have been continuation down to the second support here, and on through. It could have been the trade of the week. You have to take these signals, because you only need a couple of them to make up for the losses. So it's been a rough week here, just because of the fact of what I just said. You're looking at this whole week. If I were a trader, you know, I'm not switching my strategy around, but if I had to look at this week independently and say, oh, look at this market, what could we do? I would say fade a 70 tick move. That's the way to do it. I mean, as an example, what was Monday? Monday was the 7th. So all right, so here you go. Opens right here at 9 Eastern, 8 Central. So you have 50. So let's take a 70 tick and fade it. So 10, 20, 30, 40, 50, 60, 70. Right up around here in the 20-ish area, you could fade that. You would have made money. So I'm not going to go through every example, but that's the kind of market we're in. We're in this type of market where you take the open and you fade the 70 ticks. Take the open, fade 70 ticks. You're going. So in other words, you're going the opposite direction. That's the kind of market we're in right now. It doesn't favor my strategy at all. But I'm not going to switch. I'm not going to switch my strategy around, because I'd rather have one in place where I have a 3-to-1 risk to reward ratio, meaning that I only have to have a winning trade every 3 trades to break even, and then hopefully there'll be trades that are over that 3-to-1 as well. But this week has not been kind to that strategy, and from what I've seen over the course of a given month, there's usually between 3 and 6 moves of that magnitude. But we're just getting a slow start to this month, absolutely. So that's pretty much what I see. Nothing really to talk about here on the S&P. S&P's dead as well. I mean, we had that initial move I talked about this morning from 1467 to 1463, and then these guys are even worse shape than the crude oil traders, because this move is pathetic. I mean, you're talking about 3 points of movement. So there hasn't been anything going on in equities. The big trade was the gold trade this morning that I pointed out earlier in the video. We had the rally and then subsequent sell-off, and those guys had really the action of the day as far as the markets that I'm looking at. And we'll see what next week brings. But really, you have to, in these tough trades, when you're having these losses because of tight markets, you have to remember why your strategy works. It's a lull of probabilities and numbers. You could try to become this trader and scalp around the 70 tick moves, but then once volatility increases, that move goes to 120 ticks, and then every time you get in at 70, you get blown out at 120. So I tend to not like the counter trend trade, but my trade requires a lot more patience for it to work out. but and you have to look at a longer time frame. So with this trader that's doing a counter trend, they can look at it from week to week basis. But for my type of trade, I have to look at it from a month to month basis. I know in any given month there'll be 3 or 6 times where I'll have a move of that magnitude to cover some of my losses, and then maybe once out of the month, I can hang on to a trade even more than the 3 to 1, and I'll get a 4 or 5 to 1, which will make the outsized profits. And I can get more into this in a later video. I'm just trying to establish. This is somewhat of a journal for myself, but then also establish, my trading philosophies and strategies, and hopefully as I continue to do these videos, you'll understand them better, but then maybe they'll evolve. Maybe I'll bring more strategies in and do a couple different things, but right now I'm just going to keep it somewhat simple and really just go over my core strategy at this point. So you guys have a great weekend, and I will be back next week.